If your mortgage is coming up for renewal in 2026, you may be asking one of the biggest financial questions homeowners face right now. Should you choose a fixed mortgage or a variable mortgage? And with global uncertainty, rising oil prices, inflation concerns, and mortgage rates moving in different directions, that decision has become a lot more complicated. In this video, I'm going to break down the difference between fixed and variable mortgage rates in Canada, what is changing in 2026, and how to think about which option may make the most sense for your situation. Hi, I'm Serge Bourgoin, and if you are renewing your mortgage this year, this is not just a routine checkbox decision. This is an opportunity to review your financial picture, your monthly payments, your future plans, and make sure the mortgage you choose actually fits where you are today. Let's get into it. Section 1. Why this decision matters more right now. Mortgage renewal is becoming a major issue for Canadians in 2026. More than 1 million mortgages are expected to come up for renewal. And at the same time, we are seeing increased volatility in the financial markets. Why? Because global tensions, especially in the Middle East, have pushed oil prices higher, added new inflation risks, and created more uncertainty in the bond market. And that matters because bond market movements affect fixed mortgage rates. At the same time, variable mortgage rates have remained lower than fixed in many cases. So now many homeowners are looking at their options and asking, do I lock in for stability or do I take the lower variable rate and hope it saves me money? Section 2. Why variable rates are getting more attention. Let's start with variable rates. Variable mortgages are getting more attention again, mainly because of pricing. As the Bank of Canada moved through its easing cycle, variable rates came down. That has created a wider gap between variable and fixed rates. In some cases, borrowers are seeing variable rates priced as much as half a percentage point lower than comparable fixed rate options. And that can make a real difference in your monthly payment. So it is easy to see why variable rates are appealing right now. A variable mortgage may give you a lower starting rate, lower monthly payments today, more flexibility, and often lower penalties if you need to break the mortgage early. That can be especially attractive if cash flow matters, or if you think your plans may change before the end of the term. Section 3, the risk with variable rates. But here is the catch. Variable rates come with uncertainty. Yes, they may be lower today, but they can move during your mortgage term. And while rates have already come down, what happens next is far from guaranteed. Inflation could stay sticky. Global instability could continue, economic conditions could shift, and future Bank of Canada decisions could change the outlook again. So even though a variable mortgage may save you money right now, it does not automatically mean it will cost less over the full life of the term. That is why the decision cannot be based only on the starting rate. Now let's talk about fixed mortgages. A fixed mortgage gives you something many people value highly, especially in uncertain times: predictability. Your payment is locked in for the term, which means no surprises if rates rise again. For many homeowners, that peace of mind is worth a lot. A fixed mortgage may be the better choice if you want stable monthly payments, easier budgeting, protection from rising borrowing costs, and less financial stress. If you are someone who likes certainty and wants to know exactly what your payment will be every month, fixed may feel like the safer route. Section 5, the downside of fixed rates. Of course, fixed mortgages have trade-offs too. Typically, fixed rates are higher than variable rates at the beginning. And if you need to sell your home, refinance, or break your mortgage early, fixed mortgages often come with larger or more complicated penalties. So if you think you may move, refinance, or access equity in the next few years, that flexibility piece becomes very important. Again, this is why there is no one-size-fits-all answer. So how do you decide? Here are the key questions to ask yourself. First, how comfortable are you with risk? If your mortgage payment going up would create real stress, fixed may be the smarter choice. Second, how important is predictability? Some people want certainty in their monthly budget. Others are willing to accept some fluctuation in exchange for a lower starting rate. Third, what are your plans over the next few years? If you may move, refinance, or renovate, or access equity, the penalty structure matters. Fourth, what does your full debt picture look like? Do you also have car payments, lines of credit, or other monthly obligations? If so, stable mortgage payments may be more important than chasing the lowest possible rate today. And finally, what helps you sleep better at night? Because the right mortgage is not just about math, it is also about peace of mind. Section 7, the big takeaway. Here's the bottom line. In 2026, the fixed versus variable mortgage decision in Canada is more complex than it has been in a while. Fixed rates are being influenced by bond market volatility and inflation expectations. Variable rates are being influenced by Bank of Canada policy and the broader economic outlook. So you are not just choosing between two rates. You are choosing between two different types of financial exposure. A fixed mortgage may be better if you value stability, budgeting, and protection. A variable mortgage may be better if you want a lower starting rate, flexibility, and the possibility of future savings. The right choice depends on your financial situation, your goals, and your comfort with uncertainty. Section 8, closing. If your mortgage is coming up for renewal and you are trying to decide between fixed and variable, take the time to review your options carefully. Your mortgage renewal is not just paperwork. It is a chance to reset your strategy and make a smart decision for the years ahead. If you would like help walking through your options and understanding what may make the most sense for your situation, reach out. And if you found this video helpful, make sure to like, subscribe, and share it with someone who has a mortgage renewal coming up soon. Thanks for watching.